good, everybody? It's Jonah. Come back at another video. So it has been about a year now since the last time I recorded and posted a trading recap, and I promise you guys I stepped away for good reason. First and foremost, I stepped away because I wanted to take a break from trading, but second of all, it's because you know, on my journey towards profitability, I felt like there was a missing ingredient. Like I knew that I was seeing some results, that the market was beginning to make sense, but I felt that there was something that was preventing me from getting to the next level. And that missing ingredient was in fact higher time frame bias. So if you look at any of my previous videos leading up to this one, you'll notice that I was trading without a bias. I was marking liquidity pool on both sides, and I was waiting for price to target one to then trade and take price down in the opposite direction. But the problem with that logic was that I was never factoring higher time frame bias. And so in many cases, I was trading counter trend, right? I was going against the overall trend and the overall direction, which is why in many cases trading felt forced. It felt as though sometimes I was having to go against the grain, and why sometimes the results felt to some degree a little bit random, right? It wasn't as predictable, and I wasn't catching like larger moves because of that. And it took me many months to realize this, and I didn't want to step behind the camera until I felt comfortable and ready, right? Until I was basically following price for many weeks and months to feel comfortable to be able to identify this and implement this into my trading. And since I've implemented this in my trading, right, I've been able to experience tremendous results. Effectively, the results that I've been searching for, I'm now being able to see it unfold, right? And so this trading week, like as you see for today's video, we're going to do a trading recap for Monday, July 6th, 2026. But if you notice here at the bottom right for my calendar, today is currently Friday, July 10th, which means we wrapped up this entire trading week. And I'm excited to do breakdowns for each and every day this week, because to me, I consider this like the perfect week. And it's not necessarily because of like profitability, and I'll explain to you guys why that's the case. But I consider this the perfect week because this week has many of the examples that I want to show you guys with this strategy, right? You got your ups, you got your downs, and you got also the moments when you should step away from trading and the days where you should be doing nothing, right? Because one thing that a lot of traders or very few traders ever talk about are the days where you shouldn't trade, or the days where you shouldn't do anything because price is not showing you what it is that you're looking for. And so, at least in today's day for Monday, right, I took two losses, and many traders won't show the losses, but of course, losses are part of the game. And so, I'll show you guys why I took a loss on this day, and I want you to also pay attention and watch the next few videos that I'm going to be releasing, because then it'll show you me showcasing the strategy and showing how it does in fact deliver and how you can bounce back from losses, right? So before we ever begin to jump into anything, we first look at Forex Factory, because Forex Factory gives us the news for the week, and then effectively based on the news, it allows us to decide which days we're going to be behind the charts and which days we aren't. So for Monday, we had ISM services. So this is a day where I would trade. And then on Tuesday, we have FOMC meeting minutes. So nothing important, crazy important this week, right? Nothing that will prevent us from trading. So looking at this, the weekly overview, we know that we're going to be behind the charts every single day this week, right? So let's jump in from Monday. So starting off, right, for this day, my first step whenever I get on the charts after I look at the news, right, and I know that I'm good to go, is I determine the higher time frame bias. So in order for me to determine the bias, I go on the 1 hour time frame. And for the 1 hour time frame, I basically look at the most recent price structure before 8:30 a.m. And the reason for this is because 8:30 a.m. is when the hunt begins. It's when price begins moving to target liquidity. And so when price is hunting liquidity, that is when price typically goes against market structure. It can effectively break all the market structure rules, and because in many cases it's going after liquidity. So I look at which, like I have both pairs, like I have the S&P and the Nas both side by side, and I look at which pair has the most recent price structure if it's like a break or a continuation, right? I look at market structure prior to 8:30 a.m. of the trading day. So if we look at Thursday, July 2nd, you see price made an aggressive push up and then blasted through the lows and made a low, right? So the range that we're looking at is effectively from this high to this low. And obviously, we see that price has maintained that. So remember, price went up and then it blasted through, so it made a low. So that tells me that price is bearish because price has not taken out these highs or this low after this push lower. So S&P is bearish, and the same idea with NAS, right? You see NAS made a push up, then after this push up, price aggressively went down and cleared these lows. And since then, right, we've been in this range for both the S&P and the NAS. So this tells me that I'm going into this day with a bearish bias, expecting price to go lower, right? Because price has not taken out the highs or the lows for either pair. And I've noticed that these pairs, they move in tandem. Like they could be like, you could look at them as like sibling pairs or like cousins, right? Probably like siblings, and they tend to move in the same direction. So if NAS has a break of structure, let's just say higher, like a break of structure bullish, then I'll look at both pairs as bullish, right? And the same idea here. So I'm approaching this day with the mentality that both pairs are bearish, right? So we have that. So now, because I'm expecting both pairs to be bearish, I now want to wait until 8:30, right? And then once we have 8:30 here, this is the candle for 8:30. I'll just do one more candle to be safe, right? We now have 8:30. So this candle right here, we're on the 15-minute time frame. So this candle right here is from 8:15 to 8:30. Now we see that a high gets formed, right? Because this is clearly a high, it stands out on its own. So we'll mark that. So this is the buy side liquidity that I have marked, right? Remember, if we're bearish, then we're expecting price to go lower. So before price goes lower, we want to see price make its way up, clear this liquidity, and then decide to make its way all the way down to get to take out this as a target, right? So that's what I'm anticipating. So at 8:30, right, we look to the left to see what is the most recent 15-minute swing high, and we have it marked here. And the same idea for the NAS, right? Look for the NAS. This candle is the 8:15 to 8:30. What's the most recent swing high to the left? Clearly this candle right here. I mean, it's hard to see, but these two are not equal highs, right? This candle is actually higher than this candle right here. So I'll mark the high right here. And if it's a little tough, you can always go to like a 1 minute time frame, right? And you'll be able to see, right, this candle is kind of hard to see, but this candle is higher than that one, right? So now I have my highs marked. And then from this point on, right, I now want to mark my liquidity pools, right? Like my targets to go lower because I'm expecting to be bearish, right? So what are my targets, right? You have a target here because this is a swing low here, and then you have a target down here. And then the same idea with this pair, right? You have a target here, which this green is just the London lows, right? You have a London lows, you have another target here, right? Another target all the way down here till we get to the final target, right? So you're seeing how this all gets set up. Now, we have what we're looking for, then we could jump into the 1 minute time frame, right? So just so you guys know, I took the trade on the S&P, so the focus is going to be on the S&P, but I'm always looking at both pairs side by side. So we want to let price play out. So I don't mind if price attacks the liquidity, because if price attacks the liquidity before the 9:30 open, which is stock market open, then all I want to see is after 9:30. Like let's just say before 9:30, price makes its way up and clears this liquidity, right? Then after 9:30, I just want to see it make another high and make the high of the session. So anytime after 9:30, which is the stock market open, I want it to make the high or the low of the session depending on the direction we're going. Since we are bearish, I want to see price make the high of the session so that we can sell high and take it down lower, right? I hope this is all making sense. So as we continue pushing price, right, like letting price unfold, you're seeing that price is making its way down. And what is price doing? We can go on the 5 minute time frame, right? What is price doing? Clearly is clearing out liquidity here, 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 right? Price is attacking all these levels. Now that's not ideal, because remember, if we want to take price lower, we want these targets to remain intact, because that's how we're gonna, those are gonna be our take profit levels. But it's not the end of the world, right? So we continue going fast forward to 9:30. We'll see what happens with 9:30. Okay, boom, right? So you see 9:30 makes aggressive push up, and at least for the NAS, you see that this 9:30 open cleared this target right here, so that wouldn't even be a legitimate target anymore. So you see this is what you need to pay attention to. You need to pay attention to see how price is reacting. So if you notice with the NAS, right, NAS, this low right here cleared the low down here. So if I'm looking at both pairs, I'm already more interested in the S&P, because as at the 9:30 open, the S&P did not clear any sell side liquidity, right? This still remains intact because the 9:30 open was right here, right? So to me, I've noticed that price at 9:30 open has a tendency to go in the opposite direction for where it wants to go, right? Like if price is bearish, 9:30 open, it typically goes in the opposite direction because it's going after liquidity, it's targeting liquidity. So right now, just looking at these two pairs side by side, I'm most interested in the S&P because it's left the sell side liquidity in place after 9:30, right? So now, and on top of that, right, if you notice here, S&P attacked the buy side liquidity, whereas the NAS didn't, right? Because this is still intact. Now, of course, it was targeted here, but we wanted to make the high of the day, and S&P did it, whereas the NAS has not. So now, because S&P targeted buy side liquidity, I'm now waiting for price to, leave a bearish fair value gap. Right now, we're not getting anything. You can see now the NAS cleared the well, it attacked some liquidity, but it didn't break that high. So we're still not entertained by the NAS, right? Now we see with the S&P, it's now left an obvious fair value gap. So let me zoom in on this pair right here, right? So let's focus on this because this was the pair that I was taking the trades on, right? So you can see price came up, purged the liquidity, and then you see price went down a little bit and then made another push down. And what did it leave? It left a bearish fair value gap. So this is what you guys need to understand, right? Price has a tendency to do certain things depending on the direction where it wants to go. If price is bullish, then it's usually going with upwards momentum, and because it's usually moving with upwards momentum, it has a tendency to leave bullish fair value gaps, which whether you want to call them fair value gaps, imbalances, whatever, right? This move here of price taking buy side liquidity and then breaking down structure and then leaving a bearish fair value gap, that is a sign of price wanting to go lower, right? And it left an obvious gap. Like, you're not going to miss a gap like this, and this is in a 1 minute time frame. So because of this happening, right, immediately I decided to go short. Now, of course, this is a big stop loss, right? Because I want to have my stop loss above the high, right? And we have the entry at the fair value gap. Why? Because these fair value gaps, they're like magnets, right? Price has a tendency to, be attracted back into this area. So that's where we have our entry, stop loss above the high, and then where we're targeting, right? The final target, at least for the day, would be these lows right here, right? Because we have them marked off. These are the lows of the entire day. So think about it. We're bearish, right? This push here is the high of the day, and our final target is the low of the day. And we can have additional targets. We got fair value gap here, these, this low down here, right? You have a lot of options. So this was a setup that I was looking for, right? And then as we let it play out, right, price made a push down, and clearly price broke structure right here as well. So price came down, broke structure. So we have multiple confirmations: bearish fair value gap, structure broken, liquidity grab, and we're bearish on the higher time frame. So it's a high probability setup. Now, if we continue to fast forward, let me just fast forward a couple candles, right? You see price eventually trips us in. So now we are in the position. Now, normally with my strategy, I would wait until price at the very least closes under, sorry, I would wait at least for price to close under this level, right? Because this is the most recent swing point, the most recent swing low. So if price goes under this level and closes, that is when I typically move my stop loss to break even. Now, as I mentioned, this was a loss, right? So you can see price kind of consolidated for a little bit, and then Price never went under this level. Price is consolidated, and then boom, right? We got taken out at our stop loss. Our stop loss got hit. So just because your stop loss gets hit doesn't mean that you necessarily give up on the day, because it could very well be that price is making one more push before wanting to break lower, right? So stop loss was hit, no big deal, right? So now I'm just sitting here watching price, right? I'm just watching and watching and watching it, and I'm waiting for another bearish fair value gap, right? So price came up, cleared these highs, right? And then now it's going lower, right? And as you can see, price eventually broke lower and left another fair value gap. So this is what I'm looking to. I'm now looking to short price, stop loss above the highs, right? And the same idea. I'll put my target all the way at the very bottom. What is that? That is the daily low, right? The low of the day. Why is that? Because higher time frame, we are bearish. So I want to take price for a sell and then take it all the way down to the final target. And on the way down to take partials. Where can I take partials? The same idea, right? You can take partials, lows right here, equal lows here, right? And then obviously this low at this level. So that's what I'm looking at. And here's the thing what you guys need to remember. Because we already took a loss for the day, we don't go in with the same risk. We enter with half risk. So if we risked 1% on the first trade, then the second trade we're going in with 0.5% risk, because the point of a second entry is to be able to make up for the loss that you took and potentially a little bit of profit. It's not for you to double down and double your risk, because then if you lose, you're in a much bigger hole. And the point of trading is you want to minimize your risk, and that's you're minimizing your risk by going in with half of your original risk, right? So clearly price tapped us in, but then eventually, right, price takes us out. And once we take two losses, we're done for the day, right? That's it. We're absolutely done. You chalk it up. Now, why am I sharing this day with you guys, right? I'm sharing this day with you guys because you need to remember that you're not going to be perfect with trading, right? Even though I did everything right with my high time frame buys, with my analysis, with my entries, with my stop loss placement, with my targets, everything, there's going to be some days where you're going to lose, and that's okay. There's no reason for you to be discouraged. The reason for this is because if you have a strategy and you've seen your strategy play out over and over and over, then you know you show up to the market with a probabilistic mindset, believing that if I do everything right, then I'm going to have a significant edge in the market. And more times than not, things are going to play out in my favor. So even though this was two losses, and you could say it's 1.5 risk R to R loss, right? It was still a successful day because I follow my strategy to the T. And the reason why at the beginning of the video I said that this was a perfect week to showcase you guys is because you are going to see that this strategy does in fact play out the next few days, right? And so you're going to see that you just like with trading, you just want to remain disciplined and you want to continue following your strategy, because your strategy, if it's a strategy that works, if it's a strategy that repeats, then it will play out and then you will find profitability, right? Trading is not about being right every single time. It's about remaining consistent and sticking to your strategy. I know the strategy works. Even though I took two losses on this day, I know that it works because I've seen it for years. Even before I even knew what I was doing in these markets, right? I was able to see the behavior and price. And I was able to see this strategy deliver over and over and over. So it was just a matter of me sticking in the market long enough to see it unfold for me to believe that this is what's actually happening, right? So this was the trade recap for Monday, July 6th. It led to two losses, but that's okay because you're going to see, and I highly encourage you to watch the next few videos for the rest of this week at the very least. You're going to see how this strategy does in fact deliver, and you're going to see days where you should stay away from trading in the markets because it's what's going to help you remain profitable. You're going to see the game that the market plays. So that wraps up the video. Enjoy the video. Leave a like and subscribe as we're on the road to a million subscribers, guys. So once again, it's Joel, and I'm out. I'll see you guys for the next video. Alright guys, this is actually after I recorded the trade recap for Monday, July 6th. I was struggling to figure out why the executions weren't working, and I realized that the reason why the execution didn't appear was because you can't show the execution during the replay mode, right? So now I returned back to, the Monday session to show you guys like the actual execution. So right? It was that I had a short right here, like I went short and I had my stop loss above. So as you can see, this gold candle right here, the first candle that taps into fair value gap, that's where I entered my short to take price, much lower, right? Somewhere down here, right? Further down there, right? And price came up, enter for short. And then as you can see, eventually price goes up and then I get taken out with this bullish candle right here. So right, that would be the first loss for the day. So then, I didn't give up my bias. I still maintained the bearish bias. And then when price came up, because sometimes you get stopped out, and then the stop out doesn't necessarily mean that price is like changing direction necessarily. Sometimes it might want to do another push up before the actual move lower, right? So price came up here. Then as it started breaking down lower, it left another fair value gap. So when I entered this second position right here, put the stop loss above the high, um, that is when I entered the second position with half of my risk because I already took a loss, right? So you don't want to compound your losses and make them worse. You just, if another opportunity meets your confirmations and you're able to take an entry, you'll take it at half risk so that if price does outplay in your favor, if it does play in your favor, you can essentially make up your loss and potentially walk away with some profit, which clearly didn't happen, right? Enter for a short right here, and then prices went against me and took me out. So that's the recap for that day.